Good morning, ladies and gentlemen, and welcome to the show. Glad to have you guys here this morning. Uh, we're going to talk about what's happening with the Fed. You know, now listen. Today they're having an FOMC meeting, and they're going to discuss matters. And the minutes are going to come out. Now on Friday, they're going to have a meeting at Jackson Hole, and then minutes are going to come out from that. And also, what is Federal Chief Jerome Powell going to say on Friday? The markets are waiting in total anticipation for these on what the Fed's going to say. Just minute changes in Fed policy can affect the markets tremendously. It's got no fundamentals anymore. The markets aren't markets anymore. They all revolve around Fed policy. There's no market anymore. It's all what the Fed says or what the Fed's going to do. It all revolves around Fed policy and expectations of what the Fed's going to do in the very near future. This is what our markets have become. This is appalling, and nobody can see it's appalling, but the markets don't care. The markets only care about more easy money. That's all it is. Just more easy money. So the markets are all there's no floor under the markets. There is no floor. It's all got to do with the easy money that's coming in. And more. They want more. And their expectations keep getting greater and greater about what the Fed's going to do. And so if the Fed pulls back from these expectations, we could have a monster. It could be a monster, Now, there's a lot else going on. There's kind of like this trade wars going on, this tariff war, And what's the Fed going to do? What's the Federal Reserve going to do to support every time? This whole thing is created like a convex loop or a cycle where pressure comes on the Fed to do something to keep us from going into a recession. At the same time, the trade tariffs exacerbate the situation, and it's created like a closed loop. Let's get started. Let's open up the charts right here, and let's take a look at what's going on. First with the silver price. Now they're saying, oh yeah, by the way, maybe we will have a recession, but it's just going to be a little tiny one, nothing really, just a little bump in the road. Nothing. It's going to be a tiny recession. That's what they're saying, right? Well, that's like a mother, she's got a really fat kid, he's got to go to fat camp and everything, He comes in, basically waddles in, sits down at the table, and he starts looking over at his mother, and asking her, I want a Twinkie. He's sitting at the table. I want a Twinkie. So finally, she caves into him, and she grabs a big box of Twinkies down. It's like 24 Twinkies in the box, and she sits it on the table. And she says, but you can just one. Just one. He says, okay, just one. That's what he says. Okay, just one. And she turns her back over there, and she starts doing the toaster and everything, and she can hear the crinkling and crunching of him opening up the Twinkie bags. Well, this is the way with them saying that we're only going to have one tiny little recession. That's it. It's nothing really. It's a little, when she turns her back around, half the Twinkies are gone. That's the way it's going to be with this recession thing. Once it gets going, once it gets fired up, and and a recession really gets going, then slowing it down on the other end, is a big problem. Now, the United States economy is still moving along fairly good. It's the strongest in the world. These other countries are going into recession. Now that they're making an admission. Yeah, maybe we'll have a little recession. Oh, we'll have to wait and see. But anyway, look at the price of silver today. 1704 bid, 1714 ask. It's staying. It's holding its gains it's made, staying above $17, which is really good. Let's take a look at gold. Today, 1501. And so gold is maintaining its lead above $1,500. Well, actually 1,180. It's down $5 on the day though, but its rate's still in that range of above $1,500, which is very good. Let's take a look now at cryptocurrency market capitalizations. It looks like cryptocurrency's taking a little stumble. It's $259 billion today, 68.9% Bitcoin dominance, and we see the coins falling off. We see that Bitcoin is broke down under $10,000 again, 99.89, and dropping today. And so gold and silver are holding their value better right now at this moment in time than cryptocurrencies. The effects of the recession and stuff, you know. Recessions, by their very nature, are deflationary. And the first tendency amongst traders is to run into dollars when deflationary pressures of a recession hit. Then what happens is you get the Fed reaction, you get the reaction from the central banks, and then, you know, it's not so smart to run into dollars. Then we get the reaction where commodity prices start to go up, and that free, cheap, easy money starts to hit the scene, you know. What these guys who run into dollars are missing is the very fact that these central banks can create as much dollars as there are leaves on the trees. This is what they're missing. Let's take a look now at Dow Jones Industrial Average, and we're going to refresh the page, but it looks like we're up 250 points on the day so far. And this is the 5-day chart. You can see over the last 5 days, we can see a steady increase actually in the price of the Dow. You know, over the past 5 days, it's been creeping upwards again over the past 5 days, albeit a few little dips and stuff, but it's been creeping upwards. Now we're gonna take a look at oil prices. And what we see is oil prices have been creeping upwards very similar to the Dow, about the same amount over the last 5 days. But today we're looking at a 51 or 61%. It's 1.09% up on the day. It's $56.74. Looking at a little increase in the oil price today. Let's watch treasuries now. See, treasury yields are rising today. It looks like the only falling yield is on the U.S. 1 month, but it's only falling marginally. All of the rest, we're getting a fair decent rise. 3.2 basis points in the U.S. 7-year, or 3.6 on the 5-year. So it's in the middle of the yield curve where we're getting the highest gains the yields are going up in the middle of the curve the most. 3.6 basis points is not a huge move, considering we've been getting 10 basis points downward pressure, and then we get 3 basis points up, and then we'll get like 5 or 10 down. You know, it seems like one day it goes up, and the next day it'll go down more than it went up. So this trend toward the lower rates, you know, all the way across the yield curve is continuing. This trend that led us into the yield curve inversion is continuing, even though we get a day up like this. We'll get 1 or 2 really heavier days down. So that's kind of what you can expect. Let's take a look at the U.S. dollar index today. 98.18 on the U.S. dollar index. Now, I wanted to point out something while I end my show. I wanted to point out something interesting here. Let me flip the page here. We got to take a look at this. This could prove to be very interesting later. General Electric. There's claims out there that the company has engaged in a $38 billion accounting fraud. These are the claims. And it's over 40% of the company's market capitalization. This, if true, is the biggest fraud in history. It's bigger than Enron, and it's bigger than WorldCom combined. This is a huge fraud, right? And basically what it amounts to is their financial service part of the company. Like they have different parts of their company. They have a financial services division of General Electric, right? And investigators have accused the company of claiming insurance premiums as earnings for decades without setting aside adequate capital reserves to pay policyholders. Well, that's what they've been doing, evidently. We assume that's what they've been doing. Now, they cite industrial data shows that 14% of these claims have been filed, and they have resulted in a $15 billion loss for General Electric. But this only represents, there's 86% more of these claims that could be filed that'll come against General Electric's balance sheets. Now, there's a guy called Markopoulos, and he has uncovered this fraud. And here's the thing. You get one more recession comes. It's very likely that you can add to the list of companies and stuff and banks and stuff that could go down in the next recession. Top one on my list is Deutsche Bank. But it looks like General Electric is possibly on that list too. You know, and this is just going to intensify the crisis when it comes, you know. Because General Electric's a huge company. Listen, thank you guys for listening to this market report this morning. Give me a thumbs up. Really appreciate that. You guys have a great day. The rest of the day, it's going to be sunny here all day and hot. Really hot. I don't ever remember, really. I've been here a long time. I don't remember such a long, hot, dry spell. In all my time, you know, up here in Atlantic Canada. I'll tell you, it's really, and a lot of mosquitoes this year. Oh my goodness, they'll carry you away. Thank you guys, and bye-bye.